Right. So imagine if every single time you saw a bullish video or price projection or whatever on XRP, that person actually had access to this institutional order flow. This is the daily chart on XRP, and you guys can see. Alrighty, so before I share my screen, in today's video, my goal is going to be to just help you all better understand the current market landscape and just continue to give you guys the tools to navigate it with confidence. We're going to walk through the latest fundamental breakdown. We're going to review how we prepared for the risk-off environment this week and just kind of explain what that means for today's price action. We'll go into detail, um, taking a look at XRP, Canton, the total cryptocurrency market cap. More than anything, I just want to really encourage you guys to keep investing in your education, and get you all to really see that real long-term success in these markets is built on knowledge, discipline, and consistency. And just showing you guys that consistency in these Zoom calls and through these reports and just through the level of accuracy that we have achieved here in this community. So we're going to start off with first going through our fundamental report, and then we'll do a quick technical analysis update. And then we'll finally dive into the order flow charts on XRP so that you guys can kind of see how everything connected in real time this week in terms of trapped volume and so on and so forth. All right. So let me share my screen real fast. And we just want to start off where we opened the week on the 25th of January. That was our Sunday report, our Sunday review, and just go over reviewing what we had talked about, just to show you guys again the importance of reading thoroughly through these reports, considering the current market landscape in which we're living through. So I even publicly put this out to everybody, asking everybody, to just read this and understand the market environment so that your decisions come with precision and accuracy and not just speculation, hype, and misalignments to the current market fundamentals. So taking a look at our January 25th report, this is everything that we had touched on was going on. And I just want to focus your attention on some key things, some key attributes of this report. First, considering where the market landscape is at today, we had touched and talked on the earnings reports this week. I mentioned a data heavy earnings reports where I said as January draws to a close, financial markets are re-entering one of the most information dense weeks of the quarter. Fourth quarter earnings season is accelerating with a heavy lineup of major U.S. corporations reporting results. Together, these earnings will help determine whether corporate profits are holding up in the face of elevated interest rates and slower global growth, where strong earnings reports could stabilize sentiment, while widespread earning report disappointments would reinforce fears that tighter financial conditions are beginning to weigh more heavily on business activity. And I mentioned Microsoft, IBM, Tesla, Apple, Meta, all these earnings reports coming out. So be mindful of that as we go into our update on the landscape today and how that's all unfolding in real time. We talked about the Federal Reserve meeting. I specifically forecast, in particular, what Jerome Powell would say. I said here, overall, Powell is likely to stress that monetary policy is well positioned for current conditions, reinforcing the message that the Fed is comfortable waiting for more clarity before adjusting course, which means higher for longer until data supports that shift. And that is the exact environment that we got after the FOMC release this week. To continue, we highlighted the risk off environment that we would be mindful of this week that would continue to weigh on risk assets. And I said in a negative scenario this week, escalation in tariffs, any renewed geopolitical stress, any negative vote on Trump's tariffs, stronger than expected US data, or a more hawkish Fed tone, coupled with an increase in demand for safe haven assets, or the most disruptive risk still remains aggressive yen intervention possibilities, which could all trigger rapid unwinding of yen carry trades and widespread deleveraging. Such events would likely pressure all risk assets simultaneously. And so once we go over today's landscape, you'll see that all of these things in their own kind of category or niche are unfolding in real time. So the risk off backdrop that we discussed and talked about at the very beginning and onset of this week has now materialized. I also talked in terms of our structure standpoint. If we broke below $2.89 trillion, which was our support at the beginning of the week, to expect a possible decline to lower $2 trillion ranges. I said that that possibility cannot be ruled out if we were to break 2.89 trillion, Looking at the total cryptocurrency market cap right now, we are down about $164 billion. We have broken below that $2.89 trillion threshold. That is opening the door for lower levels. The next one on our radar below this level right now is 2.62 trillion, which we'll get into here in just a second in terms of technical analysis when we review that. So all in all, our Sunday report has held firm and shows the level of accuracy so that nobody should be confused as of right now. So if you go on the internet right now, there's just a lot of confusion. You have those normal accounts that are like posting comments like, what's going on? Why is the market down? Crypto's a scam. What's happening? But in reality, it's not. It's just that larger market participants are deleveraging from riskier assets and they are investing heavily into safe haven assets considering the fundamental backdrop. So what is that fundamental backdrop? Let's go over that. Here is our updated report from January 29th. Fast forwarding to today and remembering, keeping in the back of our mind everything that we talked about and touched on January 25th to get the week started. So at the time of writing, the total cryptocurrency market capitalization has declined approximately. This was this morning when I wrote it for you guys. We can now change this to $130 billion down on the day and is currently trading. Obviously, of course, this also needs to change below its weekly lows. Price action remains confined with the broader consolidation base sitting slightly below $3 trillion, hovering just above the key dark pool at 2.89 trillion. That also needs to change from this time of writing this rising. This area continues to act as an important technical support zone. However, despite this temporary stability, global uncertainty remains elevated. As a result, capital continues to rotate into traditional safe haven assets, most notably gold and silver, rather than flowing into risk assets such as cryptocurrencies. This dynamic reflects a cautious market environment where investors are prioritizing capital preservation over aggressive risk taking. In our start of the week report, we specifically warned against becoming overly optimistic as a sustained market recovery was unlikely unless there was a meaningful improvement in the geopolitical landscape, tariff negotiations, monetary policy expectations, yen intervention risks, and overall risk sentiment. As of today, those conditions have not improved, and instead they continue to favor a risk-off backdrop, keeping crypto markets under pressure for now. On the geopolitical front, recent developments have intensified market uncertainty. Gold prices surged to fresh record highs near $5,600 on January 29th, while silver also reached new peaks. At the same time, oil prices rallied following renewed tensions between the United States and Iran. These moves were driven largely by comments from President Donald Trump, who reiterated the possibility of military action against Iran. In response, Iran's foreign minister stated that Iranian armed forces are prepared to respond immediately and powerfully to any potential attack. Such rhetoric significantly increases geopolitical risk. When tensions rise to this level, global investors typically shift away from speculative assets and into perceived stores of value. This explains the strong inflow into precious metals and the relative weakness in cryptocurrencies. I highlighted in bold where I said if this situation escalates further, most likely if it does, it'll be over the weekend. As we know, historically speaking, geopolitical tensions for some reason tend to flare up over the weekends. Markets should be prepared for a much deeper risk-off correction across equities and digital assets alike. On top of all that, the tariff uncertainty continues to weigh on market sentiment. On the trade front, uncertainty remains unresolved. Highlight that in bold. There has been no confirmed update regarding congressional approval of President Donald Trump's proposed tariffs. Recent reports have suggested that a formal vote may not occur until February 20th, and in some scenarios may be delayed until later in the summer, which leaves lingering uncertainty on the table for a couple of months. This prolonged timeline keeps the markets in a state of limbo. Without clarity, businesses, institutions, and investors are hesitant to commit capital aggressively. As long as tariff decisions remain unresolved, uncertainty will likely continue to suppress risk appetite. Over the coming weeks, monitoring developments on this front will remain critical and on our forefront, as any confirmed outcome, positive or negative, could act as a major catalyst for broader market direction. On the yen intervention front, we are still seeing fears on these headlines. Another important factor contributing to the current cautious positioning is the ongoing concern around potential Japanese yen intervention. Recent reports indicate that these fears have not subsided. If Japanese authorities intervene to strengthen the yen, it could trigger a rapid reversal in yen fund carry trades. Such unwinds, historically speaking, often lead to sharp sell-offs in global risk assets, including cryptocurrencies. And you guys can see that directly in the headlines. It says, Tokyo has stayed deliberately quiet on the day-to-day market swings repeatedly, or repeating only that it is in close coordination with the US authorities. By keeping silent, they make the market think that they must be doing something behind the scenes. Their silence is fueling speculation and heightening uncertainty. There's that key vocabulary word right there, right? Another thing that I highlighted in this little tiny report is that they went on to say that this is described as an approach that is intentional. So, I'm just wondering, based off of just the mentality that we have in this community, that this pullback was necessary for these financial institutions to liquidate all the retail over leveraged positions that exist in this space. I just wonder if this is another thing that they're just adding onto the layer of uncertainty to drop the markets, to discount it all, liquidate the over leveraged retail traders so that these institutions can then buy in at a discount, right? Especially considering that it mentions that this is intentional. Just something to consider, right? As a result, many traders are still maintaining smaller positions and avoiding excessive leverage, anticipating that sudden currency volatility could destabilize broader market sentiment. This lingering risk continues to sit on the background, limiting upside momentum in riskier assets like crypto, again, for now. In addition to geopolitical and trade relating risks, markets are also factoring in the possibility of another U.S. government shutdown. We saw last year how the shutdown threats contributed to deteriorating investor confidence and weaker sentiment across the board. You can see those headlines here. A renewed shutdown would likely disrupt fiscal planning, delay economic data releases, and reduce policy clarity, all of which tend to weigh on financial markets. This remains another variable reinforcing the current risk-off environment. Of course, this could change in the coming days ahead, but for now, those are the headlines that we're seeing. On the Federal Reserve policy front, risk-off sentiment was further reinforced following Jerome Powell's recent comments at the FOMC press conference. While he did not explicitly rule out future rate cuts, he also did not provide any guidance that would increase market confidence in aggressive easing. Instead, Powell emphasized that the labor market remains resilient, which we're seeing as of recent. There's a report that I just highlighted here. Where is it at? U.S. weekly initial claims fell by 1,000 to 209,000, showing a slightly weaker labor market than expectations of 205,000. However, continuing claims fell negative 38,000 to a 6-month low of 1.82 million, showing a stronger labor market than expectations of 1.85. So Jerome Powell's comments yesterday have now been solidified by the actual data that labor market is still resilient. Economic activity still continues to show strength. Inflation still remains relatively elevated. We're going to get an insight into inflation in the core PPI tomorrow. Policy decisions still will remain data dependent. So remember, look at this key vocabulary on the 29th. What did I predict on the 25th, right? We talked about this in the previous report. This reinforces a wait and see approach from the Federal Reserve. Here you can see in the highlights, it mentions that there's a possibility that we're not going to see a rate cut until June. Then down here it says and talks about a healthier economy. It says in light of that, there's no logic for a cut unless you believe that either the economy or inflation is going to slow significantly from now. Although markets are still pricing in approximately 2 rate cuts, the Fed's latest projection points towards only 1 rate cut in 2026. So over the coming months ahead, we would need to see that projection shift back towards 2 to 3 rate cuts. For more aggressive easing to materialize, data would need to be clear evidence of labor market weakening and sustained disinflationary trends. Until that occurs, monetary policy will likely remain restrictive enough to limit upside in risk assets, including crypto. As for tomorrow's upcoming inflation data, we have the core PPI in focus. So now attention is going to turn towards the upcoming US inflation data, particularly the core producer price index. Right now, the market is expecting a modest uptick from previous readings, which is not good for the overall inflationary backdrop. One key risk to monitor that I'm personally paying attention to is whether inflation prints hotter than expected. If that occurs, it could revive concerns about renewed tightening or delayed rate cuts, further pressuring markets. While rate hikes are not currently the best case, persistent upside inflation surprises could force policymakers to reconsider their stance. For now, this remains a potential risk rather than a confirmed trend. On the other hand, cooler than expected inflation readings would support easing expectations and could help restore some optimism toward risk assets and cryptocurrencies. Another thing that I did not include in this report that we talked about on January 25th was again going back to the earnings reports portion, where I particularly mentioned downbeat earnings reports would likely weigh on global risk sentiment. We fast forward to today, and what do we see in the headlines? S&P 500 falls as Microsoft dives 11%. Software stocks tumble. It goes on to read, Microsoft dragged down the benchmark with an 11% slide, which would be its worst day since March 2020. That's after the Magnificent Seven member reported that cloud growth slowed in the fiscal second quarter. The company also issued soft guidance on operating margin for the fiscal third quarter. A tumble in software stocks added to the losses, with fears growing among investors that artificial intelligence would disrupt Microsoft's business model. You have another one over here that talks about how, where's it at? Threats to stocks and the dollar remain. All of this covers and talks about how Trump has recently threatened U.S. tariffs on Canada. Then it talks about the government shutdown here. It talks about the escalating tensions and tariff debacle with Greenland and Canada here in this area. It talks about a government shutdown, right? So all of these things are from retail reports January 29th, 2026, that we had covered and touched on days in advance. Here you can see it says Mega Microsoft added to the pressure, sliding about 10% after reporting a slowdown in cloud growth for fiscal second quarter, putting the stocks on track for its steepest one-day drop since March 2020. The company also issued a softer than expected guidance on operating margin for the fiscal third quarter. Investor unease has been amplified by the rapid pace of AI development itself. Anthropic released Cloud Opus 4.5 late last year, its third major model launch in the last 2 months. The company said that the model excels at coding operating computers and assisting with complex enterprise tasks with ideal users, including professional software developers and knowledge workers such as financial analysts and consultant accountants. So again, it's just downbeat earnings reports and this misalignment with, everybody kind of dialing back the overhype around AI and artificial intelligence. And all of these things, like literally nothing screams risk on at all. Like there's not one fundamental development right now outside of maybe like some partnerships that have been recently announced amongst different blockchain protocols and whatnot that is actually bullish for the cryptocurrency ecosystem. There's even still a lot of uncertainty around the ongoing market structure bill and whatnot as we speak. So all in all, these are some of the factors that are currently weighing on the market sentiment, that in which we discussed in detail at the very onset of the week. So hopefully nobody was confused. I saw in the Golden Dawn section today, a lot of you guys were able to capitalize on the selling that the market had experienced. There's a whole bunch of you guys that were able to take some sell scalps today. So absolutely phenomenal to see that all work out for you guys in real time now that we're here in the current market environment. All right. So heading into tomorrow, just again to be mindful, because I'm going to have to give you guys a new fundamental update just to talk thoroughly through what to expect tomorrow. We do have the core PPI on the forefront. Geopolitical tensions, any tariff related headlines, or any escalated tensions between Iran and the US are definitely going to be monitored in the coming days ahead. Outside of that, hopefully, again, we can see the environment that I painted for you all in previous video breakdowns where maybe we do get market structure clarity. We see the bill passed. And to some extent, that allows the total cryptocurrency market to decouple from the rest of risk sentiment because for the first time ever, we finally have regulatory clarity and maybe that drives some sentiment back to risk assets like crypto. But for now, I'd say that outside of that, that is the only thing that could possibly change the current market sentiment. If that does not change the market sentiment, then of course we would need a complete turnaround in the current geopolitical, tariff, and data-driven backdrop in order to see risk assets recover, which for now we have not seen, right? So with that in mind, same technical analysis principles that I had touched on and discussed in terms of the total cryptocurrency market cap still exist. I'm still paying very close attention to the aggressive seller that exists in this area that has thrown up a passive defense. Every single time buyers have tried to come back into this area to break above that seller, that aggressive seller that exists here has just been sitting here throwing up a passive wall, blockading the buyers, trapping them, and throwing price back to the downside. So even if we were to see a substantiating bounce from any of these dark pools, I'm still not getting overly optimistic until we turn $3.2 trillion into a support and start to see an optimistic market recovery above those levels. Any rally up into those areas, failure to break those areas should be seen, in my personal opinion, as profit-taking opportunities on rotational bags that you're holding in your portfolio. A little bit late for that now. You don't want to sell at a bottom. Nonetheless, that analysis was given to you guys back at this high when price was trading at $3.2 trillion. With that being said, to the downside, now that we have broken 2.89 trillion, if we take out this low, we are most likely going to see an aggressive push down to the next dark pool. The next dark pool to the downside we have been highlighting for some time exists around 2.62 trillion. However, I firmly believe that the overall goal of the market makers right now is to liquidate the lows that existed back during the tariff debacle back in 2025. The April lows come in at around $2.3 trillion. So if we do end up losing this threshold, breaking this low, and seeing prices and sentiment drop lower, I would not be surprised if we didn't come into the $2.3 trillion delta or dark pool. That would take us right down into those April lows. We'd likely see some nice liquidity spikes down into those levels, possibly even coming down into $2 trillion flat. So be prepared for that over the weekend, especially if we see any aggressive headlines surrounding Iran and the United States. To the upside, again, $3.2 trillion still remains to be that threshold that we need to see buyers overcome, turn into support, and aggressively push price above. If we can see that, 3.4 to $3.7 trillion are next on our radar. But we are a long stretch away from that, both in terms of technical analysis and market sentiment. So I'm not expecting that anytime soon, at least not for the coming days ahead. Probably have plenty of time to cover fundamentals and technical analysis before we even consider those higher levels. Taking a look real fast at Canton. Canton, honest to God, out of my entire portfolio, is probably one of the only assets that's holding itself up right now, right? I personally think that this is primarily because of what Yuval Ruse specifically mentioned, that Canton's price action is not driven by speculative hype. It's actually driven by real world market value that's running on the global synchronizer. This is a prime example of how he might have been absolutely right. If we can see Canton hold and not submit itself to a deep retracement like the rest of the crypto market, I'm going to have more faith in what Yuval Ruse recently said. If, however, Canton coin does succumb to a deep market retracement, again, still looking at from our previous analysis, we'd need to see a break below and a retest, turning it into a resistance of the 15237 coupled with a break beneath the triple moving average on the 8-hour time frame and above. So if we cannot break above the recent high or the local high from January 1st, we see buyers get trapped, sellers become aggressive. We break below the 15237. That would be the first indication that sellers are possibly back in control. We then would need to see a break below these previous bullish structure points. That comes in at around 14.5 cents. If we can turn 14.5 cents into a resistance, that would most likely solidify a break beneath the triple moving average. That would be a case for concern on Canton coin to expect a deeper retracement back down into the 11,356 to possibly even lower targets. But for now, again, that is a long stretch away. Below the 11,356, nothing has changed. 0,999, 0,8237, and 0,655 are still on our radar. To the upside, if Canton's price does not cool off and we can continue to remain range bound above the 15,237, we can continue to see buyers trap sellers at these levels, turn it into a support and become aggressive. We are still possible, or we're still on the horizon to possibly see 18,194 come into fruition. I firmly believe that if we do see a push up into 18,194, it's most likely not going to stop there. I'm going to go outright and assume that because we can, I'm pretty sure there's certain platforms that allow you to trade leverage Canton positions. There's likely leverage positions that exist above the highs at the 17.5 cent range. I would not be surprised if we saw a sell squeeze that at least takes us up halfway into the 21 cent range, coming in at about 20 cents before we start to see some profit taking and a pullback. From there, we will decide whether or not Canton's holding some support at 18,194. And if we can turn 18,194 into support, get ready for higher prices on Canton. Those higher levels come in at 21,363, 24,055, and 27,279. I believe on the new update, there's also a new dark pool that comes in at the 33-cent range. So be mindful of that one as well. I just haven't put that on my charts yet. All right. Those are the upside targets. You know what to be mindful of. To the downside, I would be worried of a deeper retracement if we break below 14.5 cents and turn that triple moving average into a resistance on Canton. Until that happens, I'm going to hold firm that Canton is likely to continue to the upside. Personally, I would like for it to pull back because I would like to buy a shit ton more of Canton. As for XRP, our previous analysis has held weight. We mentioned that if we did not break above the $2.04 range where this aggressive seller exists, we were likely to continue to see a deeper retracement, especially if we broke below the $1.84 threshold, turned it into a resistance. You can see that as of recent, we have recently retested the $1.84 range. We could even drop down to the lower time frames just so you guys can see how accurate these freaking dark pools are. We broke below the dark pool at $1.84. We saw buyers make an attempt here to push back above that. They failed. They got trapped. Sellers overpowered and became aggressive. Buyers made an attempt to absorb those sellers. They had another failed attempt to aggressively push above the $1.84 range. $1.84 has now acted as a resistance yet again, and now XRP is trading below $1.84, which now opens the door for a deeper retracement down into the lower level dark pools. Just in terms of dark pools, before we head over to the order flow, to the downside on our radar, $1.69 is our first bearish target, going back to the higher time frame. I'm probably going to hold off on buying XRP at $1.69 unless we see a substantial amount of aggression and buyers absorbing sellers at this level. Then maybe I'll get back in if we bounce back up above $1.84. But I think I'm going to attempt to try to hold off to see if we get a deeper retracement. I'll probably start buying some more XRP if we can break below $1.39 in an extreme risk off environment. And that would likely come into fruition if we saw those lower targets on the total cryptocurrency market cap sub $2.6 trillion come into fruition. Below $1.39, worst case, oh shit handle, we have $1.27, and we also have 98 cents on our radar, where I will 110% be looking to accumulate some more XRP. To the upside, if at any point in time market sentiment shifts, this just turns into a liquidity sweep where market makers are just grabbing the lows from the middle of December. We see buyers become aggressive, trapping sellers. They push back above $1.84, turn it into support, and continue to become aggressive. Again, same thing. I'm not getting overly optimistic of a substantial recovery unless we break above the aggressive seller that exists here, where you can see they trapped buyers before, became aggressive enough to push price down into this lower range. I need to see buyers break back above that level, turn it into support, and then we can get optimistic of possible higher prices on XRP. Until that happens, which I'm sure we'll have another Zoom call before it does, I'm going to sit on my hands and expect lower prices. Alrighty, naked eye price action out of the way. Let's just shift over real fast, and I want to show you guys all of the sell volume that currently exists right now on XRP. I love going over this stuff in real time with you guys in the order flow because it just gives such a great visual representation of what we would really truly need to see happen on XRP's price if we were actually going to see higher price levels. And remember, retail traders don't have access to this. So, the normal everyday average retail trader on social media doesn't get to see how much sell volume exists in XRP's price action right now, which is relatively insane. It would, in my personal opinion, if more people tapped into this community and the access, the data, the information, and the software tools that we have access to, it would change a lot of people's opinions about XRP's price action. Give me 1 second. I'm in Zoom prison again. I'm not too entirely sure why it's not letting me share my screen. Hold on. Right. So imagine if every single time you saw a bullish video or price projection or whatever on XRP, that person actually had access to this institutional order flow. This is the daily chart on XRP. And you guys can see in terms of buyers getting trapped at highs, how many times this proliferation has taken place. So all the way back when price was at about $2.70, which I'd say right now is one of the most extreme thresholds we need to see broken above and turned into support on the daily time frame before we can get optimistic of some overly excessive or extreme recovery on XRP. Every single time buyers have made an attempt to become aggressive, which you can see here in all these daily candlesticks, support walls being thrown up, buyers making an attempt to overpower sellers over here to the left-hand side. Every single time sellers that were previously aggressive were revisited, they just turned into passive sellers, trapped buyers at highs, threw up sell walls, followed through with aggression that broke previous support, trapped these buyers, and continued with the overall downtrend. And this trend has continued time and time again. Same thing here. You can see buyers making an attempt to become aggressive, to break the aggressive sellers over here to the left-hand side. Every single time that attempt happens, same thing takes place. Passive sellers trap the buyers at highs, throw up sell walls, become aggressive enough to break previous support, and continue with the overall downtrend. It has now continued to happen yet again here. Same thing. And then most recently, same thing here. This was the most recent attempt by buyers to aggressively push above all the sell volume that exists over to the left-hand side, which they made a complete and utter failed attempt at. I was super ecstatic about this possibility of an attempt by buyers to break above all of the sell volume, but clear as day, the sentiment has not supported that increased buying activity. So yet again, we see buyers becoming aggressive, back up into areas where sellers were previously trapping buyers, becoming aggressive enough to break support, retesting sell walls. Buyers just got trapped. Sellers became aggressive enough to push price back down into the lows, where now recently all of the most local buy walls have now been violated by aggressive sellers. And what you'll notice is that today, even on the daily, look at how crazy this is. There was an aggressive buyer that made an attempt to defend at this local bottom right here, where there was a previous support. However, signaling that this buyer is trapped inside of this bearish candlestick with yellow volume following through. There is a buyer aggressively that just got trapped at this local bottom, and sellers have now overpowered them. So this just shows the reason why I love this order flow is because this puts all speculative nonsense that XRP's price is going higher aside and actually physically shows you what we need to see in terms of technical analysis in order to even support or think of higher prices on XRP actually materializing and coming into fruition. And what does that mean? That means that we would need to see just like how all of these sellers are engulfing all of the buyers, trapping the buyers internally in price, and leaving these sell walls externally on price. Remember, we talked about this in previous videos. We would need to see the buy walls flip externally on price. Buyers, just like in these candlesticks here, trap sellers at lows, follow through with aggression, break previous sell walls. And right here, this is actually a perfect example of price action that we would need to see. See how these sellers were trapped at these lows? Buy walls were thrown up, signaling that buyers were aggressive in supporting this price. They then broke above sell walls, retested them, turning them into support and trapping sellers, following through with aggressive buying that broke all of the previous resistance, continuing to trap sellers at lows and following through with buyer aggression. See how all of these sell walls are trapped internally in price. Zooming out on the daily now, We would need to see all of the sell volume that you can currently see on the daily trapped inside of price and see buyers flip externally, engulfing all of this sell volume. Until we see that happen, there is no case for higher prices on XRP because at any point in time, even if buyers were to push price into $2.44 or $2.59 or $2.68 or even up here into $3 and let's call this 18 cents where the sell wall exists, what could happen? Buyers could push price into these levels, and just like how every single time they've done it before, they could get trapped by the sellers, the passive sellers that are sitting at these areas, and then sellers could just become aggressive and push price back down. So logically speaking, we need to see buyers engulf all of these areas and become aggressive, turning these areas into support, trapping sellers at these areas and continuing to follow through with aggression. And that all is likely not going to happen until we see the sentiment change. We see aggressive risk taking in the overall market scheme of things unfold. Right now, that is not a reality. What is a reality is that sellers are clearly in control. You can visually see that right now as sellers are externally controlling price and buyers are constantly getting trapped inside of price here, 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 and here. With that being said, if that trend continues, we're likely to see lower levels in terms of the most local support. We see a buy wall down here at about $1.52. And we also see sell volume down here, which comes in at about $1.34. I wouldn't be surprised if we see those levels unfold if buyers cannot defend at the current levels that we're trading at, which is $1.78. So be prepared for these lower level targets on XRP, both the dart pulls that we discussed and talked about and these two levels here. Right? So hopefully that just gives you guys a more realistic visualization instead of just hoping and sleeping at night thinking that XRP's price is going to go higher. We in this community know that even if price was to have a nice, crazy bullish surge, even if it came all the way back up into $3.16, we know in this community that there could be a passive seller that exists up here that could trap a buyer. If the buyer's not strong enough to break this level, what's going to happen? It's just going to result in a full-on retracement, right? So hopefully you guys have enjoyed Scalper sharing these updates with you guys. He's been sharing these updates with you guys constantly in the XRP analysis section. Every single day, he's called these moves out to the absolute T of a freaking degree. So hopefully if you guys trade or invest in XRP, you've been paying attention. Outside of that, though, that's all that I have for today's backdrop and breakdown. Giving you guys a clear fundamental overview, clear technical analysis recap, and overview as well. We'll continue to monitor these things heading into the weekend. This is our last fundamental Zoom call for today. I'm sure that Aqua's going to have a call later this afternoon on his side of things. Outside of that, though, I will see you guys either Sunday or Monday next week. Any questions? I'll leave the floor open for commentary, or if you guys just want to chat for a minute. If not, then I'll see you guys next week.